Tom White of Red Option Advisors joins me now for stacking up with a number of stocks to get to, and good to have you here, Tom.
It's good to be back.
Let's start with Starbucks. Why are you watching Starbucks right now?
The stock's been beat up a little bit over the last 8 months. I think it's down about 13%. The company continues to grow. Its footprint is expanding. They're doing everything right as far as innovation goes. The valuation's a little bit high in there, but with the growth numbers that they've seen, it kind of supports it. Pays a little bit of a dividend, which is a nice bonus. And after the pullback that we've seen, we feel like that $54 level is probably going to be like a little bit of a bottom, and then maybe up to that 57.5, 60 level is in the foreseeable future, as long as they continue to grow.
You know, it'll be interesting to see what happens with coffee prices. Starbucks doesn't tend to lower its prices, but I know some other places are because of what's going on with coffee futures.
Yeah, I sent an email to the CEO about 5 years ago saying, hey, every time coffee futures go down, my cup of coffee doesn't get cheaper.
And what did he say? Did he reply?
They did respond, and they said that they don't only use prices of futures and coffee futures for the price of coffee. So it's, yeah, I don't see them lowering prices anytime soon.
I'm so proud of you for actually, and the CEO's a great guy, so
Yeah.
you know, he probably actually, that's good, that's very good.
Yeah, he's the reason that they innovate so much, and having a leader like that kind of gives that high valuation some credence.
Let's move on to another stock that you're watching, and it's Citigroup. And I know these financial stocks are starting to become sensitive because we could get a Fed move. So what do you see happening in Citi?
Yeah, that stock is basically following any Fed news, and if you look at the Treasury market, you can kind of gauge where that's going to be. Over the last 2 weeks, we've seen the expectations for a June rate hike go from 2% all the way up to almost 40% right now. So along with that, the assets that these banking stocks hold is so massive that any quarter point rise in the interest rate is going to be, you know, millions and billions of dollars on in profit. So if that interest rate hike happens in June or July meeting, we could easily see Citigroup start rallying. It's pulled back quite a bit. It's ground higher a little bit as expectations grow for that, but it's all going to be about the Fed. We've got Yellen speaking on Friday, and she's got another speech on Tuesday, I believe. So we'll look at some hawkish hints from her, because typically what we'll see is the other Fed governors be hawkish, and then Yellen comes out with the hammer and she's a little bit more dovish, saying they're not going to raise rates. So if there's any hawkish tone to her comments later this week and early next week, then we could definitely see that expectation rise even further for June or July.
We've had several traders come on the show and talk about jumping into Nike here. Would you jump into Nike?
Soon, if not right now. Along the lines with Starbucks, as far as price, $54 seems to be a low point in Nike. That stock's pulled back over the last 6 months about 17%. So we've seen some pain in there. We've got the Olympics coming up.
Right.
We've got the soccer championships in Europe and in North and South America coming up. So they're going to get a lot more exposure, and then heading into the football season, we'll get even more exposure. So it pays a decent dividend, and also it's pulled back so much that the valuation's getting a little bit cheaper. But along the other side of that, competition's really heating up. Under Armour, Adidas, that space. If anything happens price-wise, as far as margin squeeze, we could see a little bit more pain, but I think a bottom's almost in Nike.
I think you're ahead of the curve on these stocks, so good for you, and thanks so much for coming on the show.
Good to be here.